Good morning, welcome to the ADS Securities Markets Update. Beginning with the US GDP figures, the growth rate came in less than the market estimated, growing by 2.3% in the first quarter of this year, while the estimates were to grow at least by 2.5%. The good news is that the first quarter GDP has been revised higher towards 0.6% instead of a decline of 0.2%. But at the same time, the first half of this year, GDP is basically way below the Federal Reserve target, growing by 1.45% only in the first half of this year, comparing to 1.85% in the first quarter of the previous year of 2014. This is also weakened the chances for a rate hike in September, and this explains why the market traded within a low volatility throughout the day, even after the revisions and even after the numbers. Moreover, the US economy is facing more challenges ahead, as it needs to grow by at least of 3.6% in Q3 and also another 3.6% in Q4 in order to reach the 2.5% annual growth rate target. The US dollar indeed rounded slightly against some of the major currencies yesterday, but remains the British pound remains very strong and remains the strongest currency throughout the weekend. The British pound or the cable or the sterling dollar closed the day with a doji candle, which basically keeps the positive outlook for the time being in place as long as the pair continues to trade above the 55.50 and the 55.30, which basically represents its 50-day moving average and its trend line support on the daily chart. Today there are more economic figures will be released from Europe, Canada and the US, which likely to have a notable impact on the markets throughout the day. Beginning with Europe, we wait for the inflation data in the euro area, which is the most important today, and the estimates are to remain stable at 0.2% for the flash CPI and 0.8% for the core CPI. However, a disappointment is more likely due to the decline in commodities. Moreover, we wait for the Eurozone Unemployment Rate, which set also to decline back toward 11, down from 11.1. During the US session, we start with the Canadian GDP, or for the month-over-month GDP, which set to show no growth over month-over-month after declining for the past two consecutive months, which would confirm a recession, or especially if the numbers came in with a negative reading or a negative surprise. In the US, we wait for the Employment Cost Index in addition to Chicago PMI, and finally the revised University of Michigan Consumer Confidence. But the main focus will be on a Chicago PMI in addition to also to the Employment Cost Index. A Chicago PMI set to grow again after 2 months of consecutive declines below the 50 key level, which basically represents whether if it's a growth or a shrinking. But so far for the past 2 months, we've seen a shrinking for 2 consecutive months. And finally, the Employment Cost Index may ease back toward 0.6%, down from 0.7% quarter over quarter. Traders need to be very cautious today, as it's the end of July and the end of the month, and month-end flows is likely to hit the market throughout the day, especially at the end of the US session. Therefore, you need to be very careful, as liquidity and volatility is likely to be or set to rise significantly. This is it for today, and this is it for the week. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. I'll see you once again next week. Have a good weekend.